Hello, everyone. Let's have a great week. How's everyone doing? Hello, team. Hello, Face. Hope everyone had a great weekend. Hello, Carlo. How are you? Steve. Everyone doing okay? So, I want to start off looking at FX. How about that? Can't hear me. How about now, Stel? Can you hear me now? Everyone hear me? Okay. Okay, must be you, Stel. Okay. All right. So I want to start off talking about FX. What a surprise, huh? I mean, that's what we do in here. So the dollar had a great day Friday, right? Stronger than expected NFP. Very hard to want to fight the short side of the dollar. It's probably why I'm doing it. It's okay. I'm thinking at the minimum that we have some type of ABC back to 97, maybe 96.80. Yen looks similar. In fact, the dollar is stronger because you see this high here in the Dixie. 96.86 earlier in the week before the Friday NFP, whereas the yen was at the 108.50 level Sunday night, Monday last week. And so we're still trading at, basically at the same level. So you have to give the tip of the hat to the dollar being stronger than US dollar yen. US dollar yen, Steve and many other traders were talking about we have to get through 109. So could we go to 109 and then find trouble in the end? I think that is possible. Or we could find it maybe just above the highs here. Just draw this in. I think Blake is back with us from God's country. So, kind of have a little bit of a three drive happening here if we get up to new highs. And I really don't think that we're going to confirm it. RSI trading lower. We haven't quite taken out this high yet, but I'd be careful, even though long term, I think, the yen has a long way to go. And last week was a very positive week. We've had two positive weeks in a row from, the whole world being bearish. And I think this will play into yields, which, along with the dollar, spiked on Friday, giving some of it back from Friday's highs. But see how this looks like the dollar? Boom, boom. So, I mean, dollar really tracking yields. This was one heck of a move. I think we got almost a reversal week. It's not going to take much to turn this up. And when I look at this on the weekly basis, a 10-year yield, got what chart that was. Maybe it's 4 hour, 1 hour, weekly. Anyway, I have a lot of stuff coming in. I think it was around 235. Anyway, back over 210, and we're in the falling wedge. That'd be constructive. That's going to happen up around 210. So watch that in yields. If this is going to happen, it's not going to be a good environment for shorting the yen. So I feel a little bit uncomfortable not being long. So if I'm not long, I'm not going to short it either. But there could be some type of pullback, especially if the dollar corrects. So the off number in the yen is going to be way down here on a weekly basis. As long as we hold by Friday, it looks like 107.90. So, we're 60 above it right here. Also want to touch on crude. To me, this is a bear market rally from 56. Off number, we're already underneath it. but I do hold out the belief that we could still try 58 to 58.50. This was a $2 break, so you know, 120 is going to take it to 58.20. I have a lot of moving averages coming in right around that zone. Here's another one at 58 daily. God, they're both converging at today's highs. So, last night's highs, maybe that's it. But I'm going to see if I could get some type of rally here back to 58 to 58.50, wrong over 60, looking for this speed line to be attacked. Comes in right around the 54 level. And then one last thing before I hand it over. I know a lot of people are thinking gold is a double top, and I don't really agree. So this is a double top everyone's talking about right here, right here. This had a lot of momentum. This did not take out the high. Let's see, 1437.80. Yeah, missed it by half a buck. And I don't know if we're going to pull back to the breakout one more time, but I think we're going to blow through this double top, which also would be kind of negative US dollar yen. While gold makes maybe one more attempt, there are counts if you just do it arithmetically from 1380 to 1440 in big round numbers is a $60 move. So a breakout over this could take you almost to 500. I'm thinking 1480 or so. And I'll be looking to short it, which also could play into the Dixie, and this will be the wrap on it. And I might be talking my book. I started selling the dollar early on Friday, 97.05, 16, and 25. So fully positioned here. That it is still possible to have something like this in the Dixie from here. And I know it's a confirmed high, but the daily moving average is trying to contain it here. We'll see. I think over 97.20, a lot of, I think even Greg has said over 97.20, he turned real bullish. So we'll see what kind of follow through we get. I'm out over this high, 97.77. Then I think we are going to new highs, but there still is a chance that we get one more decline. Dollar longs is still pretty crowded. And if we had one more break, say back down to 95.5 and cleaned out this low, that's where I'd get very bullish and aggressive on the dollar. And you know what I'm the most bullish on, guys? Oh, hi, Peter. Okay, Peter's going to be with us. Peter Campbell's our guest at the top of the hour. Should be a great interview. Peter does real elite analysis. And this is what I'm very bullish on. It's called ForexAnalytix. It's called the best team on the net. FX, I think you guys get a glimpse of it for free every day in face, but you're only seeing part of what we do. Okay. We're near the All-Star break in baseball. Quite a few All-Stars here. Greg, Blake, Stelios, Steve. And the research is pretty in-depth. Okay, so we have some 3 hours ago. Here's a free one. Elliott Waves, Grega. Okay, looks like he's short. That's just analysis that we're getting here from Grega. 1392. Okay. And this is what Blake did. We had that breakout here. 1190, we're probably right back here checking out the breakout. But really, guys, you have a great team. You have patterns in play. Oh, Steve's shorts. Steve was short Friday, had a nice trade going there. Andre long Aussie Kiwi like that. Blaker's still long the gold. So any of these pattern and plays Aussie, Grega was on it before it happened. Very nice trade. And look at CAD yen by Grega. So any one of these pattern and plays on just one standard lot pays for your subscription for a year. So just something to keep in mind. You know, if you're new in the business and to trading, this is what usually happens. You go, well, you know, I really don't want to pay for education. And in a lot of cases, you're right. It's not that valuable. But I think what happens is you either pay for good education or you pay the market. Usually you do both, even if you get good education. But the key is if you find a good mentor, a great community to hang out with, like ForexAnalytix, and surround yourself with traders better than you, that the tuition that you pay to the market is more of a community college tuition than an Ivy League tuition. So you're going to pay, and it's just a cost of learning. And I think that it's an investment in your ambitions and career. It would be a great investment to become part of the ForexAnalytix community. And you can always have this being paid for by just your normal trading. If you're in the US, you could get a rebate check, but overseas, Jason and Trent can set it up so that you're on a reimbursement program with any of these brokers everywhere. They're a broker. There's no cost to this program. It's 100% value add. So with that being said, I don't know, Blake, did you catch up on your rest from being in heaven on earth in Montana, or is Steve coming in?
No, I'm here. I actually went to bed at 6 o'clock last night, and I got up at 3:30 this morning. So I had to catch up.
Yeah, you had like 1 hour of sleep, I saw on Skype while you were
Yeah. So the night before we were, have you ever been to Montana?
No, I haven't.
Okay, Montana is a is a well, Glacier National Park, where we were at, it's an extremely big park, and we were with some really good friends, and the friends that we were with, they live in Bend, Oregon. They have a pretty large restaurant chain of vegan fast food restaurants and around the country. They have one in New York and a few in Oregon and Seattle and stuff. But they're really, obviously into the natural organic eating, and also hiking, deep woods hiking. And so we were on some really hairy and great hikes with kids. It was awesome. But our last night, we had to fly out Sunday morning at like 6 a.m, and we were on the other side of the park till basically 10 o'clock at night. So by the time we got back, it was 1 a.m, packed, slept for less than an hour. Well, the kids slept for like an hour, turned around, put them all in the car, checked in, and flew home. And man, I was wiped out yesterday. The only sleep I got was really on the plane. So, and which aren't very long flights. And so I was a train wreck, and I'm just getting caught up on everything. And I did see some of the price action Friday morning, because we did have in our cabin that we rented, which was up on a big mountain. It was actually a ski resort. It was on the other side of the park. We had a really nice cabin with another family, and so I did have internet for the couple hours in the morning. I would get up before everybody else, and I actually saw the non-farm payroll, but I just had my phone, so I just watched some of the price action from some of the action there. And what I saw is the dollar strengthened pretty aggressively following the better than expected jobs report, and that now poses a question with in regards to the dollar is, can the Fed be dovish at this point, you know, do they even have the ability to, you know, continue to be dovish?
Yeah, they
Are they
don't
going
have
to really
much
cut
cover.
rates?
They don't have any
Yeah,
cover from that. I think Powell speaks this week. We'll get
he
some
does
news,
on
right?
Wednesday. Yeah, he does on Wednesday. So we're going to see. And you know what this leaves is that leaves the dollar a real mess. And I, you know, I look at the euro dollar and I really don't know what to do with it at this moment. You know, you got this little, you know, and Steve pointed this out in the analysis over the weekend. You have this what was previously, you know, you can see here, and again, this is all in the you know, analysis of in ForexAnalytix. You had this like nice little up channel. We're broken down here, but we're also consolidating at a 618 retracement, 78% retracement, and but this also looks like a flag. So you know, again, you know, some mixed signals here where you see this looking bearish, right? But at the same time, you know, we're near some pretty key fibs. We stopped at the 88% on Friday. I don't necessarily know if I want to get super bearish here, but the euro could, you know, point down towards, you know, 111, you know, 111.50 ish, and that seems like a realistic expectation. So therefore, as a you know, if I'm trading the dollar, which I'm not right now, I bought some. I actually bought some gold on Friday at 1394. I spun out of it already above 1400, and I just took a few points out of it. And one of the things that you'd pointed out are patterns in play, and this is the one thing that everybody should know here. And I try to talk about this is I've had a pattern in play with with gold on a breakout since the 30th of last month, which is about a week and a half. I've been playing gold long. I've probably played it long 4 different times since this pattern in play has been on. This is basically suggesting my biases being it is broken out. You know, I want to be on the long side, and so I just buy and sell it. But the reason why I'm pointing this out is because gold still is in breakout territory, despite what the dollar is doing right now. Does that make me bullish or bearish the dollar? I don't know, because you know there's been some, you know, with gold breaking out, it's hard for me to be bullish the dollar, but I see what the dollar is doing. I'm not oblivious to what the dollar is doing. I'm not oblivious to this, you know, reversal in the euro that we're seeing. It's just I have a hard time committing to that trade when you have gold moving the direction it's moving. So therefore, I'm a little skeptical about trying to play the euro to the short side here. And that's, you know, and that is my hang up. Like I mentioned to you guys just a moment ago, I am a little unsure of how I want to play the FX market, at least here for the next couple of days. Obviously, I haven't been in front of the computer for the last couple of days, so that's also another challenge that I'm personally facing, not necessarily you, that may not have been on vacation over the last week, but for me, it's like I see a lot of mixed signals. I see what the dollar's doing, but I also see what gold's doing, and therefore I'm a little mixed on what I specifically want to do with the dollar. So I'll probably end up spending the next couple of days feeling the market out before committing what I want to do, listening to what the Fed Chairman Powell says tomorrow. And as you can see, tomorrow morning, he's speaking at some opening remarks here at the Federal Bank, Reserve Bank of Boston. So, you know, what he has to say may influence how I'm going to trade the dollar tomorrow versus what I'm going to do right now, because right now it's a bit of a mixed signal. So again, this is what I'm seeing with the euro, which points lower, and frankly, I would be a buyer of the euro dollar if it got down here. If gold is still, you know, trading above 1390, which, you know, right now it's trading at 1405, 1404. If it's still trading above 1390 and the euro drops down to 111 111.70s, 111.80s, I might pick it up on the long side down here because, you know, if you look at the descending wedge, ultimately we're still broken out here. I know it's backfilling, but that's okay by me. This is totally fine, and this is something that I would, you know, I'd play the euro on the long side. But it's getting there. I don't know if we're going to get there, and so therefore I'm not even willing to, you know, step into the market right at this moment. You look at the cable. Cable's trading heavy. I mean, we're trading down at 125. Not only have we got, you know, the real possibility of a hard Brexit, but you also have Mark Carney, and he turned dovish. He had a dovish turn last week, and that I think caught a lot of cable longs off guard last week. And here we are trading down towards 125. And I've said for the last couple of weeks, I'm not getting bullish the cable unless we break above this 127.50. The question is, do you get bullish down here on this, you know, false breakdown? And you know, with the way the euro's looking, it's hard for me to say, okay, I'm bullish, you know, the cable, but not be bullish the euro. And I look at the euro, and the euro is not bullish to me, at least not right now. Some of the commodity currencies like the Aussie still looks decent. I mean, yes, we had a little false breakout right here, so I guess I should adjust these charts because I hadn't adjusted them since the last time I was looking at them. So you see the Aussie made a little false breakout up here, but we're not making lower lows, so it's hard for me to be bearish the Aussie at this moment. Kiwi still looks fairly constructive. I know we had a lower high here, a lower low, but the Kiwi also is still, you know, you can see this right here, this low here, and this low here is still higher lows. So, you know, I'm not bearish the Kiwi at this point. And here's the Canadian. Oh, and by the way, you know, I was looking at the Canadian, and if I really want to be bullish the dollar, I want to see it like develop through the Canadian first. And we actually had a little bit weaker Canadian employment number, and a stronger non-farm payroll. Why the dollar Canadian didn't break out, why we didn't break above 131.50 is a little bit of a shocker to me. I'm surprised that we didn't break to the upside. And you know, maybe my colleagues have a better understanding of why the dollar Canadian hasn't broken higher. But I'll tell you what, I mean, you know, unless we get above 131.50, I have a hard time being bullish the dollar Canadian. If you look at some of these other Canadian pairs too, I was looking at them because one of the guys in our chat room, Nidish, was looking at the Euro Canadian. I'll just pull up the Euro Canadian here. I mean, that is a, you know, a very bearish breakdown of like this, you know, consolidation. You can see this consolidation right here, something like this. Matter of fact, this actually almost looks like Bitcoin in reverse. You can see the Euro Canadian breakdown. We have the pound Canadian. I mean, this is a hell of a move. I sure as hell don't want to chase it down here, but at the same time, you know, it is bearish. Despite being, you know, obviously very oversold, or maybe the Canadian being a little too strong here. You know, it's hard for me to want to reverse it until I start to see the dollar Canadian actually show some signs of life. So again, I'm kind of unclear what I want to do with the dollar at this moment, but I'll tell you, gold still looks bullish, and therefore it's keeping me at bay at the moment from really wanting to short the euro because of what gold and actually silver just busted the new highs as well. What precious metals are doing, I still am very skeptical about it. Maybe I can get a little light from Steve and Stelios, and let's see if they are here this morning. Good morning, guys.
Good morning, sir.
Hey.
How are you?
Good morning, Stelios. How's it going?
Very good. We had some really good news. What I think was good news out of the Greek elections today.
No one cares about Greece.
Yeah, I know, but you know, it's a ticking
As it
time
seems,
bomb.
as it seems, not even Greeks care about Greece. So I would agree with you.
We
Hey,
had
this,
the
you know, if Varoufakis came back, I'd be really excited. If he came rolling in on his Harley, you know, that'd be
mate.
cool.
He got elected into parliament.
Oh, he
That's what I'm
did.
gonna say. Yeah, he made his own little party and he got like 4%, and he's in parliament, which is unbelievable. But
In any
Wow.
other country, he would be in jail since 2015. In this country, he is now
In
party
Parliament.
leader in
That's
parliament.
great. That's
Yeah.
great. So what happened in Greece? So it looks like we lost Cyprus, right?
Yeah.
yes, we did the two things actually that were interesting out of the elections. One is that with everything that's happening in Greece, and you know, we've been in a downturn, in a recession, deep recession for what, 10 years now, and still 44% of Greeks didn't vote, which is ridiculous. Anyway, the other thing is that, you know, we had Tsipras and Syriza for the last 4 years who came into power promising everything and, you know, all sorts of things, and he didn't deliver anything. And the good thing is that the people now basically turned and they said, look, we don't believe you, we don't believe all this thing you say. So basically he lost power. The question is, will the new government, will they be able to do something, you know, definitive, and will they be able to stick for another, you know, because in 4 years you can't get that much done. Really what you need is two terms. But anyway, you know, we'll see what happens, but it was a good first step.
So that's great for you as a Greek, but what does that mean for me as a currency trader?
Well, the good thing of this selection is that for the next 3-4 years or so, we can kind of forget about Greece blowing up or being a problem. At least that's what I think, you know, because there are going to be a few moves made which are going to promote investment. And I think Greece will be off the radar for the next few years. So for the euro, it's positive for sure. But, you know, further out.
Okay, but then you got Deutsche Bank, which is apparently exiting the banking business. Is that correct?
Yes, that is correct. It's huge.
Yeah, it's
Okay.
it's exiting, you know, the equities business for sure, and laying off another 18,000 employees, which now represent more than 20% of the leftover
Headcount, yeah.
force, because
The
they were left
workforce.
like,
Okay. So what does that mean? What does that mean for the euro? Because, you know, a lot of people are really worried about, you know, Deutsche Bank and their exposure, because their exposure is still there, regardless of, you know, they're cutting all this workforce. But what does that do to the, you know, to their, you know, exposure to the rest of Europe?
I think everybody's very, very skeptical, because this is like the gazillionth attempt to restructure. Of course, it is a very big one, a very big restructure. So they're trying to cut deep, you know, this time.
An ECB bailout?
I don't think we'll see something like that yet. But if, you know, if we go shortly into recession, you know, might be needed. Yeah.
What I mean, what do they do in this process? Isn't it true they have the largest derivatives book
Oh, by far.
in the universe?
Yeah, by far.
So what happens to that?
That's a good question. Theoretically speaking, it's
Draghi throws it in his account.
I
He
don't,
does
I
a
don't,
position.
I
Okay.
don't
You know,
think
you know
the
what?
problem is Draghi will have this.
Jokes aside. Okay, now one of the things that has surfaced since I've been gone this last week, and regarding, you know, the euro, it looks like, you know, Christine Lagarde is really the potentially going to be the ECB head. I mean, this is like
Yep.
a real possibility. So what does that
Wow.
mean for the euro and moving forward?
Wow, I didn't know that.
Lagarde is, you know, Lagarde as a point of view, as far as we know, she's quite dovish, actually. Now we'll have to see in action, you know, how she acts like in her new role. Other than that,
She's a big question mark for me. I really don't know what to make of it.
I read that she had a plan for the whole world. She's planning for the whole world to go into this negative interest rate environment. That's what her plan is to keep
Yeah, sounds like a
everything
fantastic
going. Huh?
plan. It sounds like a fantastic plan. Probably the fact that we already have more than $13.5 trillion
Right.
of
So there's still plenty left,
yeah,
right?
that is negative yielding is not enough for her. Who knows?
Well, I'll tell you.
What do you think, Blake?
Well, I really don't think much at this point. And it's going to be it's just, I think, an interesting point of topic that we're going to be discussing here over the next couple months as we head into October and look to change. Draghi steps down and who does take the helm, but. Right now, just looking at the markets, obviously we're in the middle of summer, so we are heading into July. It's extremely messy. I'm not sure on how I want to establish myself from an exposure standpoint regarding the dollar, and I think it's kind of mixed at this moment. So I might be looking into some cross rates to find some opportunities versus trading the dollar outright until I get a little bit better picture with what we're seeing. So, yeah, but I don't know, Steve or Stelios, if you heard my assessment of like what's happening with precious metals, this is what's happening with the euro dollar. And just the euro, but you look at the euro, the cable, the Aussie, the Kiwi, the Canadian. It's very mixed at this moment, and I don't, it doesn't give me a lot of confidence to be one direction or the other, specifically with the dollar and the majors.
I'm looking at the DXY and several of the dollar popular currencies, rates, cross rates, and I see many of them on key areas of resistance or support. So I think that the market is still undecided, but I think that we should get some better sense of direction probably within this week.
All right. Well, I'll be interested to get caught up with what you're seeing, and I want to thank you guys, not just you, Steve, but everybody, the entire team. Paul Franco really stepped up this week. The week ahead video, which was awesome, and thanks everybody for really stepping up while I've been out for my holiday and really off the grid the last week. So thank you guys for stepping in, and I'm gonna sit back and listen to your analysis from here.
Welcome back to the civilization, Blake.
Thanks. Thanks.
Steve, you were talking about the DXY, and one thing that I was thinking a lot about over the weekend was the dollar, because we had this big move on Friday, and the way I see it, over the past few months, the rate expectations have moved a lot. We all know that. We went from pricing in a few more hikes to pricing 4 cuts now. But look at the DXY index over the last, say, 2 or 3 months.
That is a very good point.
It's done nothing. And I think the dollar is going to need to catch up. And I think it will, because we have rates which have collapsed in the US, 10-year at 2%, and pricing in cuts in Fed funds futures. But the dollar has done nothing. So I think I'm still bearish a dollar. Will there be another little high towards 98 and a bit? I don't know, maybe. But I personally am bearish a dollar, and that's why I'm still long.
I agree with you. But as you said, the move lower. I mean, the first chart I'm looking at here is the DXY itself, and
it's right there, good or bad from this area, huh, Steve?
Exactly, and it's currently testing a triple confluence of resistances here. I mean, it's this descending channel of resistance. It's a 61.8 from the May high that we had, which was a multi-year high, right? I mean, previous time we were there, it was what, May 2017. Yeah, so it was a 2-year high. So 61.8 of the 2-year high and the 50 daily moving average. So all 3 of them, clustered, within, just a few pips from each other. Roughly, let's say 97.40 is the level. And, we're more or less, I mean, we tested that area. We even breached it momentarily on Friday. We're a little bit, lower, but still very, very close as we speak. So I think that, a break above there, it clearly makes this move lower corrective in nature. I mean, even if you want to see it from an alien wave perspective, like a simple ABC, or even if you just, want to see it from a perspective of momentum. I mean, look at the momentum of the move lower. We had two legs lower that, lasted like a few days each, and it looked quite strong. But other than that, I mean, there was absolutely no continuation from the market. So I have to say that if we break above 97.40, I see no reason why we wouldn't be pushing new highs. I mean, towards like 99, for example. We have a horizontal support resistance area dating back quite a lot, dating back to 2017. That is at 99. So, and I'm gonna show you more dollar pairs that have a similar look and feel to them. So,
hey guys, before you get to all the pairs, I just can't get off of this Lagarde thing. I didn't know till this morning, and you guys know more about this. So she was heading the IMF, right? And
yeah, absolutely.
They're in charge of the BIS and everything. It's really the most powerful. I thought until this, the most powerful banking position you can have in the world. And you know how a lot of these people, they gravitate towards more power instead of less. I think it's interesting. Do you think that being, Draghi, replacing Draghi is a less or a more powerful position with what's going on in the world right now, that she would want to go to the ECB instead of heading up the IMF?
Theoretically speaking, it's a less, but I don't want to make any assessments because
maybe it's because Europe's going to be ground zero for the next crisis, and she wants.
First of all, that might be the case, but second of all, we can't make any assessment because we are missing a lot of information. Just to give you a completely random example that comes in mind. What if she had to go anyhow? You know what I mean? So
Yeah.
if she had to go anyhow, what would she rather do? Take another important position or do nothing? So, it's a lot of information that we're missing to make a determination.
Yeah, musical chairs.
Exactly. So I don't want to make any assessments of what that means because we have no inside information about what, for example, initially would.
I'll tweet her.
Yeah, go ahead. Why don't you invite her for an interview on Facebook?
I'd like to have her.
I bet you do.
You say, how did you get started in this?
How did you get the same colored hair as me?
I started as French finance minister. This kind of stuff.
It's not what you know, it's who you know. So, okay, go ahead, Steve. I'm sorry I interrupted. To
be honest,
it's kind of a mind blower.
I do like her as a personality. She seems to be, like a, strong personality. She's definitely a smart woman. There's no question about it. I mean, there's no question. She's competent. Now, does being competent make her, the proper choice for an institution like the European Central Bank? No, not necessarily, as you know, because it's also about what kind of an agenda you have. It's about what kind of point of view to the world you have. In this specific case, we, of course, care mostly about, your point of view in how monetary policy and fiscal policy should be conducted. And I'm saying that because, unfortunately, we've gotten used to, during the last couple of decades, but it becomes more intense by the year, that governments, step away from doing the proper thing in fiscal policy by hoping and pressuring monetary policy to compensate for that. So that's why I mentioned fiscal policy. I know that obviously that the ECB, makes no fiscal policy decisions, but as I said, unfortunately, they're a lot more intertwined than they should be. Stelio, by the way, before we go to the rest of the charts, anything else that we had during the weekend that's worth mentioning?
Don't know. I was too focused on the Greek elections. No, I don't think so. We had some German industrial production data this morning, which missed by a little bit, but otherwise it's been pretty quiet.
Okay, and from what I've seen today, we don't really have any
We have nothing left. No.
Yeah, anything coming up that's worth mentioning. Okay, so we were talking about what happens from here having to do with the dollar. So as I said, DXY on key area. At the same time, also wrote it in the analysis as Blake mentioned, Euro USD seem to have already moved somewhat ahead of the DXY. I mean, it has broken the equivalent channel while the DXY is testing resistance. But I'm still questioning this breakdown just because we have stopped exactly at the 61.8. So, I'm giving it a little bit of, a leeway because if for some reason we rebound from here, I'm going to look at it through a different pair of eyes. Although I have to admit that if you go down to shorter term time frames, as Blake did before, it doesn't look good. It looks like it wants to continue lower. So my intuition tells me that that's going to happen. Now let's have a look at the USD Swiss. As you see, the USD Swiss also corrected lower in what looks like a megaphone formation, and unsurprisingly, we're also here testing more or less a confluence of resistance. As you see, it is this megaphone formations trend line resistance. It's also more or less the 38.2. I know we're just above it, but as coach likes to say, you can't expect perfection on the crab table. So that's one thing to note here as well. I do think that if we break above this megaphone formation, first of all, that's going to be a bullish development. There's no question. Second of all, we open up a very key confluence of resistances then, which is just above parity. You can see here at 1003, we find the 61.8 of this move lower. We also find it's also a horizontal support resistance area. Parity, as you know, is also a strong psychological level, but we also find the trend line support, which might act as a resistance from this long-term, multi-year ascending wedge. So if we do break above there, I think that parity then is going to be, the key level to watch. And, obviously a break above parity then is going to confirm that we're probably headed higher, which means, dollar should continue higher as well in general, while a rejection, keeps us again in consolidation mode and until we get more clarity of what's happening. But as I said, we're currently testing, a first area of resistance that is important, and that is something to monitor. USD CAD, at the same time, I know that Blake mentioned USD CAD. I just wanted to show that USD CAD is also at a key level. Keep in mind, this is the 38.2% fib from the September 2017 low to the end of 2018 high, but most importantly, just a few pips lower at the key 130 area. We also find the confluence of this ascending channel, a couple of years long ascending channel, and this horizontal support area. So, even if we move a little bit lower from here, we then face a very key area of support. From a technical perspective, a breakdown from 130 is going to be a major development and definitely a bearish one. Now, obviously, from a risk-reward perspective, if you like USD CAD to the upside, this is a nice area that you could, start building some long position. Obviously, being cognizant that you don't want to see a move below 130 and most definitely not daily close below 130, because as I said, that then triggers a much bigger formation and probably with big implications. Now, USD NOK also at a key resistance here. You'll see why. First of all, it's it knocked me off the last part of my short position at a profit. I was holding the last part of my position for a move towards 840. I had trailed my stop loss at 861 because 860 is a key area of resistance. But pay attention to this. We might be above 860 but we're currently retesting these ascending channels. Support might act as resistance. We're going to soon find out. This dates back to the beginning of 2018, so it's a 1.5-year-old channel. So might be significant. That means that I wouldn't be turning bullish the USD NOK yet, because a rejection from here will actually point to a retest of this 840 area as I was initially expecting, but I'm not in it anymore. One more thing to pay attention to on this chart is the fact that we're also at the same time testing this descending trend line resistance on the RSI. So probably a break above there is also going to indicate a breakout from this descending trend line in the RSI, and probably going to be pointing to further gains. So this is one more chart that was worth noting. And USD SEK, as you see, it looks a lot like the USD Swiss, because we also had the move lower being in a megaphone formation. We're currently testing resistance. A few pips higher is the 50 daily moving average, but most importantly, what I wanted to show here is that the two legs lower were perfectly equal. This green trend line here is the equality of the first leg lower to the second leg lower. As you see, we perfectly tagged that equality of legs down. Harmonics experts would call that an ABCD. From an Elliott wave perspective, you would interpret that as an ABC move. The 200 daily moving average was also, converging to that area. We never got to touch it though. Bottom line, a break higher from here is probably also going to confirm that this move lower is already done, and obviously it was corrective in nature if that's the case, and that would probably point to new highs as well. Now, a rejection, of course, keeps the pair under pressure, and another move towards 910 is likely. So as you see, quite a few pairs that are on key areas, key levels, and that's why I said that most likely, unless this proves to be a very, very, very quiet week, I would expect that we will get more clarity quite soon within this week. That means within probably like a couple of days. So I'm really looking forward to get some sense of direction, and I do think that these pairs are probably going to make a move together, or almost together, and that should be enough of a signal for me at least to start looking to either be long the dollar or short the dollar for a period of time. I had some requests about the S&P. For those of you in the chat room, you know that I shorted the S&P at 2,992 on Friday, 92.2 to be exact. I actually took almost at the lows. I took like 1/3 profit. I still have the rest 2/3 of my position. Am I convinced that it's going to move lower from here? No, I'm not 100% convinced, but I did create a pattern in play in this rebound on Friday because the risk reward remained very, very appealing. And I still think that even if this is a simple corrective move lower, we can easily at least retest this 2960 area, if not lower from there. So I still believe that from a risk reward perspective in the short term, it is likely that we're going to see some kind of a pullback. I do think that the fact that we had like good jobs data on Friday can't be interpreted in any way as stocks positive, because we know that stocks have been moving higher only based on the expectations of the Fed becoming a lot more accommodative and easing again. And good data obviously put a little bit of a question mark, at least in the pace of easing. So since the market is back in good news is bad news and bad news is good news because they'll bring more easing, I don't think we can interpret this as stocks positive. We did have a negative reaction overnight in the Asian markets. As an example, you can see, and I had a question in the chat room, so I'm going to go over a few of the indices. If you see Australian stocks, you know, quite a strong day lower. Of course, keep in mind that they remain, you know, in quite a bullish move from the lows that we had in December. But I would pay close attention to this, and I wanted to show this because, as you see, Australian stocks have been since 2008 in an ascending channel. I mean, you can see it's very, very well defined from a technical perspective. And we're getting very close to that, right? We actually got quite close to it on Friday. So I would definitely be careful. I drew that several days ago that we might have another thrust higher to retest this trend line resistance before we move lower. Keep in mind that we're talking about a channel that's been respected by the market for like a period of 11 years, right? So it's nothing to joke about. I mean, it's a very, very strong technical formation. So obviously, the closer you get to resistance, the better the risk-reward ratio to try the downside. Shanghai composite, as you see, was in a range, broke higher, but quite a strong move lower back in this range. So I'll have to start rethinking this rebound higher. Perhaps it was corrective in nature. As you see, we plunged lower after closing the gap that we left behind in April, and that is quite important. This kind of a behavior, filling in a gap and then collapsing lower, is a behavior we've seen multiple times. So it puts a big question mark of what kind of a move this was. Perhaps it was a corrective move in the form of a wedge that is already done and over. So I would be very, very careful here with the Shanghai Composite Index. Now, having to do with the Nifty, because I had a question in the chat room about Nifty banks to be exact. Keep in mind, the Nifty has been trading also in an ascending channel, of course, much shorter term since October 2018. Quite strong moves lower Friday, and we even gapped lower and showed continuation today. So quite a nasty candlestick we've got here in hand. I think that one way or another, we're going to at least close the gap. As you see, we had a leftover gap here at 11,400, roughly 405, whatever it is. So I'm pretty sure we're going to close that gap. That should bring us quite close to this ascending channel of resistance, support. And obviously, if we break, this has already happened. So if we break below that channel, then I think we would be talking about more weakness coming ahead. Alternatively, if we find support there, we maintain this channel, which definitely has to keep us bullish. So this channel is well defined. RSI divergence on the daily was also very clearly defined here. Coach would call this like a 3-drive formation for sure. So this is what I say about the Nifty, and obviously Bank Nifty, as you see, cannot be diverging much from what you see in the Nifty. As you see, they look very similar, no surprise there. And the comments are quite the same here. Keep in mind that the equivalent gap that I was talking about in the Bank Nifty is actually below the equivalent ascending channel, which means that in order to close this gap, we will have to already have created this kind of violation of this uptrend that is defined by this channel. So that is something to keep in mind. I would be paying close attention to this channel. A break lower will probably create a very decent continuation to the downside. So that's what I think about the Nifty and the Bank Nifty. I think you should be quite careful here. Price action during the past few days has been quite brutal. Now, having to do with some of the more traditional indices that we frequently look at, the DAX remains quite well beat. As you see, we had 2-3 days of weakness, but nothing to write home about. It can easily be a little corrective move lower. we're still respecting this ascending channel. So I have no reason to turn, bearish the DAX, at least in comparison to other indices. It looks very well bid. Same deal here with the FTSE, as you see. And, the rest of the US indices more or less look like the S&P. The only one I wanted to show separately is the NASDAQ, because if we actually do move lower from here, once again, I have to stress out that if we do that, I'm going to be interpreting this as a corrective move, because I have absolutely no reason to be, looking for an impulsive move lower. I mean, from a technical perspective, everything looks still quite bullish. But if we are to have like a little move lower or some kind of a move lower from here, we're obviously going to have a divergence in hand, because while the S&P was clearly trading at all-time highs, the Nasdaq is, might create some kind of a double top. Of course, it's too early to call it, but I just wanted to show that the Nasdaq did also create an all-time high, but it was incrementally. So from a chart perspective, this can just be a double top if we move lower from here. Of course, as I've said with double tops, you need to see the previous low break before you can actually call it as one. Now, having to do with the USD yen, Coach mentioned it earlier, and I want to have a look at it. I'm, watching this little confluence of these two trend lines, both acting as resistance. One of them is this descending trend line here. It was the trend line of this little triangle. I extended it. The other one, obviously, is this multi-year symmetrical triangles support that might be acting as resistance. So I do think that the break above, 108.70, you want to, be on the safe side, call it 109, 109.20, is going to be a bullish signal. It even looks like an ugly inverted head and shoulders formation if you look at it here on the daily chart. In any case, we're getting close to that. So USD yen, add that to the list of pairs that is at quite a key juncture, and we're going to know within the next few days if it's actually retesting this symmetrical triangles trend line support as resistance, and it's going to continue lower, or if this was simply a false breakdown, which obviously is a totally different thing to consider afterwards. Coach, do we have an interview today? Dale?
Yes, we do, and he's already here, I think.
Okay. Let me see if we have any questions, Delio.
Yeah, we have Peter today.
NOK yen and Nordics, please. Okay, I already had a look at USD NOK. Let me have a look at the NOK yen for you. I have no idea when was the last time probably I have it here. Otherwise, I might have never actually done something with it. It is likely. Okay, so let's have a very brief look at the NOK yen for you. Not really a beautiful chart that I would like to trade, I can tell you that much, because okay, we've broken below that. Even in the short term, this looks like a little consolidation. This was definitely corrective in nature. That was an easy formation to trade. This one that I'm drawing on here, this one, this looks like another bearish consolidation most likely. So I think below 1273, I would favor if we break down, the downside. Yes. Okay, so I think against the high, something like this is quite likely. Bottom line, Nokian still looks bearish, but I think there are better opportunities out there. Okay. Anything interesting on the Aussie CAD? Okay, let's have a look at that as well. Yeah, there is something interesting here, as you see. And what is interesting, I zoomed out quite a lot so you can see it, is that we're now testing the confluence of the previous low and this trend line support. So, quite an important level. I mean, if you do like Aussie CAD to the upside, this is the place that you buy it. But be careful, because if we break below this 91-cent area, there's more pain coming. There's no question about it. So, at a key juncture as well. I know it's not a dollar pair, so I'm not comparing it to the dollar pairs that we're looking at, but this is another chart that is at a key juncture. So, I would pay close attention to 91 cents. Okay. Coach, ready to start?
Yes, buddy. Yes.
Okay. Who do we have today?
Peter Campbell
Okay.
at MCM does some real interesting things. In fact, I'm going to start off asking him. He had an interesting take on Deutsche Bank, so we'll start there.
Yeah, Deutsche Bank's chart is one of the most horrific charts I've ever seen. So,
Yeah, I
honestly,
think you might be surprised by what he's saying here. Stick around.
Yeah,
Everyone stick around.
I can tell you as a fact that the restructuring they're trying to pull off right now is quite a strong one. So who knows? We might finally see a positive reaction from the market that's going to last more than a few weeks, because previously every kind of a reaction we've had to the bearish trend was like short-lived, very short-lived. So let's see if we can get something different.
Okay. Thank you, Steve.
My pleasure.
Okay, Peter, I'm promoting you to panelist. So I'm going to make sure you're unmuted. You're unmuted.
Can you hear me?
Got you, Peter.
Great. Something worked actually as planned.
Okay, so there is a screen share option for you to show what you're looking at.
Yeah, there is a green button in that little panel. If you mouse over the bottom of your screen, it has some options. One of them is...
I know Zoom, so let me just...
perfect. That's good.
Okay, so... One second, I am... Okay, one second, my computer seems to have acted up here.
Okay, here we go.
Does that work?
All right. Yep, it works, Peter. Thank you so much, Peter, for coming back to Face.
Great, it's good to be here.
Okay, so, why don't we start with what Steve and I were discussing and came up earlier in our session. And I saw some type of interesting tweet by you talking about Deutsche Bank, but it looks like you've prepared so much great stuff. Maybe you could just give us your take on this dissolution or restructuring plan of Deutsche Bank and the implications for possibly the euro and risk.
Well, basically, what I'm seeing right now in the markets is something I've not seen really for a very long time. And I have always had a trading perspective where I have a macro overlay combined with technical, systematic, etc. And in this particular year, macro has broken down completely. And so now here we find ourselves in a situation where in aggregate, if I show you, let's see, where is this chart? This is showing sentiment. The green line is bulls. Pretty much just about the 2009 lows. So we have as many bulls here in the market as we did slightly more than we did in 2009. And
So
importantly,
that's a bit pessimistic, because look at where
yeah.
prices were, right? So you're saying that the market is, considering all the price gains, still skeptical.
Well, yeah, and this is, I think, a Deutsche Bank situation fits very nicely in there. Essentially, I'm not trying to be
Pollyannish?
for the sake of being contrarian, but I have to say, what I was expecting was a blow off from 2730 into 3000, 3040. That was my initial expectation, with an upside of 3070, basically.
That's now it seems like that's what everyone's looking for.
Yeah,
So it
and
probably doesn't work.
well, the thing is yeah, it doesn't work, and the reason it doesn't work is because, in my opinion, what has happened is that the pessimism has stayed so persistent throughout this ramp, which has been, one of the strongest that I've seen. I mean, literally the ramp off of the 2730s was actually faster than the initial move off the low from December in a lot of ways. Not in every market, but in some markets. And, pessimism there was just ridiculous. And then it's maintained its ridiculousness, pretty much the whole way up.
So is this a classic case right here, Peter, where if you don't learn how to change your mind, you won't have any change left? Because I'm sure you could admit that you were skeptical of the market the last time we were on.
Yeah, well, this is actually an important...
You were part of that green line.
Yeah, not only was I part of that green line, a big part of my work has to do with macro. So I've always taken a macro overlay and looked particularly at bonds and commodities and other kinds of influences that either lead or confirm moves in markets. And as an example, I'll just tell you, for example, that if you have prices dropping and sentiment dropping, that's a confirmation. So if sentiment is negative and prices make a new low with
That's a confirmation for you.
the same scale of low that the sentiment is making a low. So basically, if you look at your swing lows and you look back and you say, okay, now are we making a similar type of low? Then that's a confirmation that will lead lower. But when you have the exact opposite happening, when you have prices at all-time highs and sentiment just above lows of 2009,
that's a great point.
then what you have is a non-confirmation.
So what do you think, Peter? Kind of because of the sentiment setup, and I always think that when everyone's looking for one number or level, it either never achieves it or it's meaningless. Does this type of sentiment open the door for something like 32, 3,300 in the S&Ps until we see more exuberance?
This is the chart which I have been showing lately, and I'll just zoom into. This is not particularly it's not particularly high resolution because I'm just looking at my screenshots, but you can see what we're talking about here. There's a little red box here.
So the megaphone line that everyone's looking at, it's just a huge megaphone. You're showing that it's going to break out and have a throwover for another wave to the upside. And where would 5 come in, your theoretical 5 number-wise?
Once sentiment started to do this, and I want to stress to you guys that one of the things that I have changed in my process is that I have eliminated macro except as a very distant influence. So I want to know the context in which I'm operating, but this central banking era,
It's changed everything.
yeah, has changed. I actually, in the beginning of the year, had thought that firstly the central bank had made itself look pretty not credible. That Powell was going to be a little bit more disciplined, and that the market wasn't going to be so.
Ebullient?
Well, no, not ebullient, but easily deceived. So, I thought basically after 10 years of QE, the market was going to require real action by the Federal Reserve, not just mouth opening and words coming out. And what happened is the exact opposite. We had two situations going on simultaneously. One, I think, is worth discussing because it's going to be a common technique used, I think, for years. The European debt crisis with Greece, which is appropriate since I heard you guys talking about the Greek elections, and I'm very happy that they got rid of that terrible administration over there. But the Greek situation was a disaster in Europe, and if you remember, the market sold off really hard as the debt crisis started to explode in Europe, and it seemed like it was out of control. And then as it was actually spiraling out of control and really going out of control, what happened is every time Merkel or Draghi or anybody spoke, that became a mechanism to take bad news and turn it into hope. And markets always hope higher than they should. And Trump, with his China deal, has learned the art of that extremely well. So you have the Federal Reserve jawboning, and you have him, basically creating bad news. Like, I believe he used the Mexico situation directly to create as much bad news as possible so that he could ramp up pessimism and then squeeze the market. Because a little hope goes a long way once you've gotten people very pessimistic. And, frankly, people don't trust him too much, I don't think. And so when there's a little good news that potentially comes on the line with that much distrust, there's a potential for the markets to get quite a strong reaction. And you combine that with the central bank, and that creates an interesting situation. And then there's another dynamic here, which is that the first interest rate cut by the Federal Reserve is usually received positively. And one of the reasons that happens is because...
It's a surprise?
Well, no, not the surprise. It's actually that the market, in its typical hopium type of mode, believes that the Federal Reserve can get out ahead of whatever issues.
Yeah. They're omnipotent.
Yeah, and it
people
believes,
forget about the lag time of Fed policy. Like maybe we're living through right now what they did a year ago.
Yeah, and then the thing that follows is that 1 month after the Fed cut, usually the market starts saying, "What are we celebrating?" Because it seems like the Fed might be behind the curve.
So
and
what's
then,
actionable in this environment, Peter? How are you looking to, that you have your narrative, you have diagnosed the environment. Where do you move your money?
Well, for me right now, I don't see anything that is changing the near-term picture for the upside, and that's what this chart is about. I basically think the market in this mode is going to have to make everybody wrong. So it's going to get bulls to start to really load up on positions after this breakout looks like a compelling breakout, and then anywhere from 3150 to 3400 will probably reverse and fail, I would think. And I have a lot of reasons why I think that makes a lot of sense as well. One of them is that when you think about a 10 or 11 year bull market that has been the most contrived, worst macro, like the jobs numbers, for example, a lot of people think the jobs numbers will affect the Federal Reserve's cutting. But in fact, the jobs numbers, as I posted, were terrible. They were actually the slowest growth in jobs in years. And didn't even meet the required number of 150,000 to keep up with population growth. So even though we showed 224,000 jobs created, the BLS created a magic 100,000 jobs, more or less, which were just all estimates based upon their estimates of the new businesses that were created in the month of June. And so the real surveyed jobs were very weak. And when you look at them in perspective, they were very weak compared to even earlier in the year, and extremely weak. Like, we're $600,000 jobs, 600,000 jobs less right now.
So is the bond market right, Peter? Recently we cracked the 2% yield on the 10-year.
I think the Fed's going to cut no matter what. And I think if anything comes up that just gets them a little nervous, they might actually do their 50 basis points. But, you know, I'm not bullish at all. So I'm near term dealing with the market situation. I think that market situation has people cornered. Too many people are either under allocated, not allocated at all. They're in cash or they're short. Everybody I see wants to short this, and I don't really like to use what I'm talking about seeing. I prefer to look at what is going on with positioning, and that would be sentiment related. And so,
do you look at COT for positioning clues?
Yeah, I do.
Is that telling you anything that agrees with sentiment or confirms it?
Chart, which I have available in the stream, actually on Zoom also, that is running, that's pinned to my profile, MCM_CT. If you go there, you can log in. I wouldn't do it now. And you can see this chart. This is a very important chart. This is up here where I don't know whether you can see my mouse right now.
Yeah.
But where I'm clicking, this is the panic and euphoria index. And you can see where we are is at 50.
Yeah.
So
no euphoria, no panic.
If you look at what happens when we're at 50 coming from panic, basically we've got to get close to euphoria to just start unwinding the energy of the panic. And this has the emotional energy in the market takes time. It's not going to unwind in a minute. And one of the reasons that I know this is because I wrote a project called Tick Tools, which is a real-time emotional interpretation system, and actually looks at where people are capitulating in the market, to what level they're capitulating, and then profiles it in a way that you can actually trade off of. And so emotions take time to unfold. And
not mine.
Yeah. But if you look at this, what we're looking at to get to euphoria in 50, we're talking about, 150 to 300 points is pretty normal. And I believe that we should make lower highs in terms of euphoria. And I think that you have a subdivision of how that has to work. On the slightly faster euphoria and panic index, which is the one where I'm clicking now, or I'm moving around, we would make a near-term euphoric high sometime next week or the week following, then have some sort of consolidation and make a lower high on that, which would coincide with a euphoria situation, which probably would take place sometime in August or maybe even early September. I don't see taking the shortcut here. I don't see that the markets are going to give people a chance to get in, and I don't see them giving a convenient exit for people who are trying to short right now, particularly because of all this. So I'd like to see, and there's another reason that I believe that this is going to happen, and that's because when you look at the highs we made on the sentiment index, what you see is over here into May, we confirmed those highs. So this was a confirmation. So we had highs in euphoria with highs in price. So that means that we are going to get new highs until we get to a retest of euphoria, which should be, in this case, hopefully a lower high diversion high, sort of similar to this. And that will require several attempts, just like over here in September. It never happens in a single go. Even in January in 2018, it took several attempts to get euphoria unwound.
So continued melt up into the summer.
I think we're looking at a high probability of a continued squeeze into August, and limited pullbacks, like nothing big. I don't think we're going to see 80, 100-point pullbacks yet. What I do think is that if we get to 3,100, there's a good chance that we have a retest of 3,000 from there, so that would probably be a pretty obvious trade. So 3,100 is an interesting setup. Let me show you what that is. I'm going to find it over here.
What's interesting about the August timeframe, can you think of any other major turn in the market that happened in August? Maybe you're not. Huh?
Yeah. A lot of them. 1929.
How about 1982?
Yep. I mean, there's a lot of
Yeah.
turns. In 1929, we had the blow off top of 25% move from May essentially into 27%. I think it was a rally.
That's interesting. Analog right there.
And that is similar to what's happening now. And it was similar situations. You had the president pumping everything. You had famous people talking about a new paradigm, basically permanently high plateau. You had
the rise of nationalism and fascism.
Like mad.
Huh?
You had the Federal Reserve printing money like mad. So it's very similar. And there's another thing that's going on. The Fed and the central banks are doing stimulus in ways that aren't easily tracked. So they're doing like duration sort of stimulus where they're moving liquidity into areas where it's needed more and out of areas where it's needed less. So they're not creating new money. They're just shifting around where the leverage can be created.
Okay, talking about fiat, we've had a pretty dynamic gold move. Any view on it?
I like gold. My personal.
So does Goldfinger. Goldfinger, he's the man with the golden touch. Okay, go ahead.
I want to just stress something that there's a guy named Chris Carolyn, Spiral Calendar.
Yeah.
He's probably one of the best gold people I've seen. Because he has a great tidal model of gold. I recommend him highly. Gold is in a weak period. It could get very negative, but I think he believes, I'm not the best person to ask about gold, but I'll just tell you, I think he believes that it's make or break here. If gold has a productive consolidation rather than a big sell-off, then it's going to be exceedingly bullish for gold. But if gold, has a pretty strong sell-off, we could see, a pretty deep, retracement. I like gold. I don't like central banks. I'm not bullish on this market. I want to stress that.
You like crypto? Are you part of that scenario?
No, I think crypto is going to completely implode. This whole thing with crypto is a sign of the duration stimulus that central banks are doing. And whenever Bitcoin ramps like this, I get my antenna go up, and that's another reason why I felt like we were likely to have a blow off, because crypto has been ramping, and I thought it was originally just from Chinese,
Buying
capital flight. But no, it's really central bank driven. It's excess liquidity. And that is flowing into the stock markets as well. And in this particular situation, I just want to show you this chart. This is one I've been posting for quite a while. We have a left shoulder, right shoulder, measured move to 3,100-ish. We have this local broadening pattern that is pointing at 3,100-ish, and then I believe you can see here's the bigger broadening pattern that I think will be overthrown. But originally, I thought that we would just go to maybe 3080, 3100 when I started to see sentiment lagging as the way it has, I kept having to look at these patterns and say, wait a second, they are actually going to get met. But now it's pretty obvious that it's going to take at least 7 to 10 weeks to unwind the sentiment extreme that we have now. So there's no way we can get to euphoria, resolve it, unwind it, and start to get people wrongly positioned again. But on the bullish side, we need to get people, the market needs to get people too bullish.
Okay, well then that's probably going to take both the Fed to accommodate the market and for a trade deal so that the trade fears go away. And then you'll have the fundamental backdrop of everyone saying there's nothing in the way.
Well, I don't know that actually, fundamentals actually will drive it. I think
just price, huh?
Helene Meisler says it. It's funny how price changes sentiment. And so personally, I feel like if price gets to 3,100 with bad news or no great news, people are going to be in shock. And so that will change sentiment into a situation like this market never goes down. You can't short it. If then the market pulls back a little bit and rallies higher again, especially with sentiment, faster sentiment not being very, not confirming, then we're going to end up with a euphoric peak on the longer term, and shorter term, slightly more pessimism. And that would create a situation where I think basically people who have tried to short completely give up, and people who haven't gone long feel like they've missed the whole thing and they better get in now. And managers.
So do you just sit on the sidelines here, Peter, and wait for this to manifest?
No, I'm trading short term. So I don't hold positions overnight except for options positions right now. Mm-hmm. I trade futures. So my job is trading futures. Have you tried the new micro S&P? I think it was recently launched. No, I haven't. But I have a few trading strategies that will benefit dramatically from that.
Okay. And I was wondering if any liquidity was coming in there, because the mini is really the most heavily traded contract.
Yeah, but I don't think that, it's funny, the arb between the mini, the SPY, the SPX cash options, and the ES basically mean that when you need liquidity, it'll show up in the micro. I think you could trade quite a lot of money in the micro, even though I haven't really looked at it. And for me, all of my strategies use a process of swarming. So basically, I will look at a particular position I want to build and then risk manage it with a swarm of sort of activity underneath it. So the higher resolution I can actually operate on, the better. So if I trade 10 ES contracts or 100 ES contracts, that's I get 100 shots to manage that position. The same position in the micro would be 1,000 contracts. So that means I have 1,000 shots at being able to risk manage that position. And that's a really phenomenal opportunity. So that's something that I will probably move into trading the micro for systematic stuff.
All right. Well, Peter, I really appreciate, you stepped up.
Well, I want to just bring up one more thing here, and that's the yield curve. Everybody keeps talking about the inverted yield curve.
Yeah, I'm interested.
Take a look at this. We have 10-year versus 3 months, which is inverted, 5-year versus 3 months, what's inverted. But the yield curve that matters is the 10-year versus the 2-year, and that is not inverted. And I think that is another backdrop for why it's going to be fairly easy to squeeze people.
Do you think we could have some yield curve steepening with the Fed lowering rates?
Yeah, I think that's probably going to happen.
Okay. So, everyone worried about the inversion, forecasting recession. Maybe that's why the banks have really picked up.
And then the other thing I want to point out here is the skew, and this is just something you guys can keep an eye on. the market's not, in my opinion, going to top or be euphoric enough to start to top until we get these spikes in skew. And the reason is because skew represents people buying out of the money protection. And if you notice, nobody's been buying out of the money protection. It's been increasing a little bit lately, but we need to see people buying out of the money protection, like at, decent levels, to start to see that there's some fear coming in and that there may be euphoria building in the market. And I think that that's sort of, something to keep an eye on.
Okay, interesting presentation. Strongly neutral. Sentiment is not lining up for an important market top for several months. Have I encapsulated it, my friend?
Yeah.
Okay, so everyone, I thank Peter. What's the best way for people to follow your work, Peter? It's excellent. Really you have great insights into the market. I learn every time I talk to you.
Yeah, MCM_CT at Twitter. So.
Okay. All right, my trading warrior brothers, strongly neutral through the summer. Hope you get long and pips rain down on you and your scalping is the best you've done in many years and pips rain down on you.
Great. Catch you guys later.
All right, that's Peter Campbell. Could follow him at MCM_CT, bro?
Yeah.
Okay, so that's a wrap, everyone. I'll see everyone for Turnaround Tuesday. Don't just count your pips, count your blessings, and have a great trading day. Thanks again, Peter, for stepping up today. Appreciate it.
Great, thank you.
All right, adios, everyone.